Good morning, good afternoon. Wow, it's to one already. We're anticipating today's date is the 26th day of September 2021. We're anticipating the New Year session happening any moment from now. New Year session is from 1 p.m. to 1:30 p.m. Nigerian time. You understand? So majorly, we're looking at EURUSD right now. EURUSD, I drew this liquidity down. I'll take some trade from here. So I'm taking a partial profit because we are close to a major demand on Saris. So this was the demand, so we bought this particular move to 1.100. Yes, now, I think the month of March. So we are back to that demand zones again. So definitely, the market always leave liquidity when it gets to demand zone. So to manipulate to continue going up. So I'm looking for these particular trade happening here right now with our major area of value. Area of value is where your support and resistance meet. So I was expecting that definitely the market must do a manipulation process of liquidating everybody that was buying from this exact place, tighter stop loss to start going to fail because a lot of people would have been in this trade thinking that will go up. But as long as you're not breaking any major resistance or support or area of value zone to the upside to continue going, you know that you would have taken this sell. So if I should expand that particular area very well, if you're wise and you know how this market works, you would have seen that definitely for these to come to get equal highs here, I guess this market is just coming back up to come back to supply because of the break of structure. If you find these, what's it called, large sell, we should know that we're continuing that market to, go and take all those liquidities at the bottom before going down. And even gave you a bearish engulf candle. So that was your entry, but you wouldn't have waited for this bearish engulfing because definitely you should have known that this is a, equal highs or liquidity zones that the market will definitely come and take before going back to the upside. So what are we expecting right now for Euro USD and gold? So I'll be doing Euro USD and gold. I don't have much time, but I said I should come up here and do something for you guys to see your stance. And generally, I love trading my market on my 4-hourly chart, and it's very clean. At the upside, we have support. Sorry, at the top, we have the resistance. We have that resistance in here. We have resistance for broke it to the upside, but unfortunately, we are unable to continue the market to the upside. Here became a fake out. Are you getting me? So here is now your major area of value where we broke before we were turning into. So we started selling from this area 1.10. I think in the month of August 10th precisely, I think I gave the signal to sell from 1.01050 all the way down to these supports 500 pips, 550 pips or 500 pips to the downside. The market moves in circles, market circles. So for this fake out to happen, you should know that definitely we're coming back to these areas of value. You should look at it on the monthly or the weekly. And generally, this is just a consolidation happening on the monthly chart. I need to talk about something. There is something happening that traders are just they like putting themselves in the midst of noise or something. Should I call it noise? So on the weekly charts, you can see that for us not to continue this market to the upside, like this, continue breaking. Because generally, if you are to trend this on the weekly, because the weekly time frame supersedes the lower time frame, are you getting it? So look how many weeks it took us from 1, 2, 3, 4, 5. It does not concern you. Don't put yourself in the noise. I call those things happening, in the 1 hour, 30 minutes. All those things are noise because the market is actually passing through what's called, and I will talk about it, but I have not had time to do all those videos. I'll talk about what the market does. When it gets to this particular level, is a must that it must continue the trend to the upside. But when it gets to this level, if it does not continue, if it does not break above those particular areas, the market will definitely continue its trend to the downside. And it's called the accumulation process. The accumulation process is when a market, gathers a lot of funds, start to distribute to the next phase. Because the market moves in circles. I get me. That's why you have the the 1 hour, what is happening, the buying and selling happening. Because trading generally is buying or selling of goods and services. Are you getting it? It's like, supply and demand. The money comes into the market goes up. The money leaves the market goes down. Just like, an asset. The value of an asset is valued by the numbers of money coming in and the numbers of money going out. I guess so. Statistically, if you are not looking at trading statistically and you just learned about fundamental analysis, you'll be making a lot of mistakes in your trading journey. Making a lot of mistakes in your trading journey. So that's why I said it's good for you to trade your what's it called, your higher time frame from like you know, your daily, your weekly, your monthly chart, because they are very clean and clear whenever you are trading those kind of, whenever you're taking your market, your trades from your daily support and resistance and using your 4 hourly chart to trend the market to see how the trend is going. So I have, on this particular day, immediately we were, having the support and resistance, broke above it and faked out again with this. I knew that we're definitely coming back to the support levels to come and find support, as in to come and find support to see if we can trend back to the upside again to continue a consolidation phase. But definitely the market has been trending perfectly well. So there's no point of view, align fundamentals, because fundamental news cannot happen straight 3 days once. That's why you see that the news will come out on what's it called, dollar today. The news will come out on euro tomorrow. Those things I call them noise. I don't like involving myself with those noise. That's why you see me, giving way with this day trading stuff and the swings, what's it called, the scalping stuff, because those things to me are noise. So that's why you see me using my 4 hourly chart to take my structure entries, because this market has been very clean. If you look at it very well, we had from the top side, you can see that we have a major resistance zone. I guess it, they found the resistance, but broke. Immediately we broke, we tried to testing. Look at this place. We tried to testing, but we actually fell back inside our zone. So that is an what's it called? That is a very big mistake. And on this particular day, I was telling you that the market was doing what's it called? A head and shoulders pattern to try and continue to the upside. But unfortunately, again, what happened? We had a tweezer top, or you can call it a bearish engulfing candle, which we started selling from 1050 from, are you getting it? Started selling from this major area again, which is now support, turn, what, resistance. Are you getting it? So how do you look at your market? Immediately we're getting that vibe and we are not breaking above. These are the times where they say that, okay, put your what's a risk to it, probably use 100 pips on it. Normally here we use about 100 to 200 pips stop to the upside and put 100 pips. This is 1 to 5 risk to reward ratio that's played out all the way from August to September. That's on that like 1 month that to take you to make about 500 pips in the market. The moment you are not involving yourself in those noise, the moment you are not involving yourself in those noise, just trading your the sign languages the market use. And what are the sign languages? First of all, I've told you that the market moves in phases or moves in cycles. It depends on whatever you call it. Are you getting? The market moves in phases or in cycle. And the most important part is that the market accumulates. After accumulating, distribute. And what does accumulation mean? Accumulation is the process in which the market uses all these chart patterns you have learned and these candlestick patterns. Are you getting? These candlestick patterns are the sign languages, while the chart patterns are the accumulation phase. So definitely this was a failed head and shoulders pattern that definitely had what? A support. Are you getting it? A support around this area that broke down. Are you getting? So definitely you should know that we actually fell back into that daily, support as in daily support zone back, and that support turned into resistance. So definitely you should not be buying from this area. You should have been taking just these swings. So when we're talking about, somebody was asking me that what's the difference between, a swing trader and a day trader. You can call this a swing because you can call this a swing. These are my 4 hourly swings. Are you getting it? I take my 4 hourly structure swings because they tend to flow well for me. This is a swing. Are you getting it? I can call this a swing because this was a support, previous support. So I can swing this how many pips? About 100 pips. You're getting, I can swing that then this on that swing I would have taken again back to this resistance zone because we fell back into it. So definitely I should know that after forming a short pattern, definitely the market will now do what? Distribute. I guess so. The first distribution phase he had was this broken support that turned resistance. Look at it. This was the first one you'd have taken. So for us to break the support and break this particular support and test it to 0.38, to remember, I tell you that whenever the market breaks a particular accumulation phase, it reverses just to maybe 0.382. So if you take it very well, you see that the first retracement was 0.382. So take your entry from there, put your stop loss probably 100 pips at the top side. You are an investor, not a thief. Sorry to use that language. I'm not even sorry to use that language. You are an investor, not a thief. Because a lot of people just want to, put their stop loss, enter a very higher loss and put their stop loss very tight, because I've said that the market will 0.5, 0.382 on a break of structure to the downside. Are you getting it? But they use maybe 10, 20 pips, 30 pips. You are having a $1,000 account. Are you getting it? You are risking $100 to make $500. Are you getting it? Maybe you are risking 10% out of that your $1,000. Now, what are you supposed to do? You're supposed to risk at least 10%, at most 10% of that account, which is, you're risking $100 out of that your $1,000. Put $100 to it. Put 100 pips or 200 pips to it. Are you getting a stop loss? Imagine you have what's it called, $1,000, and you are saying, okay, I have 10 ways, $100 into 10 places. Let me put $100 into this market. Are you getting it? By entering from 0.38 to 1.09450, let me say 40, and your stop loss is at 1.1040. Are you getting at the top side like this? Definitely, you should know that these are the resistance zone, or you might even increase it to 150 pips or even 200 pips, risking $200, knowing that you still have $800 to trade. Are you getting it? In case this trade goes wrong, you would have caught these 500 pips happening right now. You would have known that, okay, I have to wait for 1 month to be able to swing these. To be able to swing, what's it called? This market using a fairly structure to the downside. Are you getting it? Getting 500 pips. So $100 will end up making you, that you've risked into the market 0.1, would have end up making you what's it called, $500 on EURUSD. That's about 50% of your account made in 1 month. You should think as an investor, not a thief. Sorry to use that language, and I'm not really sorry for using that language, because no business you want to put your $100 to make $500 in 1 month. So the moment you are coming into trading and you are not applying all these, these principles of life normally into the same market, you think like it's a get rich quick market, you make a lot of mistakes. So for you to know that the market has switched to the downside, you can see the market has been very, very clean. Now the market has switched to the downside. You've taken probably 100 pips away first out of the market, because this was the accumulation phase and this was the distribution of this particular market. Are you getting 100 pips? So your $100 would have made you $100 again. You'd have waited, because this distribution right now is completed. Now, let me give you an what's it called, a warning, or what's it called, a take home. The take home here right now is that whenever you see the macula accumulating, accumulation means accumulating inside a particular. So let me give you an example right now. This is gold for you. Are you getting it? Go to the far chart. You see that gold is very, very clear in the far chart, because right now gold is still even since the month of August, since that month of August, and since we had it in EURUSD in the month of August, same date, I getting 21st, since all these places, you will see that the market actually has been trying to do what what's it called? Accumulate on gold. And whatever I wait for on gold, whenever I'm trading, I get in it, I wait for my accumulation phases. I may try to swing my 15 minutes time frame, try to swing my 1 hour time frame, swing my 4 hour time frame. But the 1 hour, the 15 minutes, 30 minutes, the lower time frames does what? They tend to fail, because if you go to the 30 minutes time frame right now, you would have seen all these markets. Well, have you been following your trend, even though you are swinging, or what's it called, swinging, or scalping the lower time frame? The higher time frame, first of all, will tell you whatever it wants to do. Are you getting it? That's why you see me waiting most of the time to get what? Connect my dots. Are you getting it? Connect my dots and find whatever the accumulation phase the market has for me. So definitely you remember we broke from this head and shoulders pattern, which is where 0.382, sorry, where it is 0.382. Now you came back to that particular resistance again. We found this about 500 pips, 1,950 to 1,900. That's about 500 pips to the downside on that accumulation. That place now becomes what? A major resistance zone. Look at it, EURUSD. This place now becomes what? A major what? Resistance zone in the market. So when the market comes back to this particular broken support area again, are you getting it? Definitely it should find, are you getting it? Resistance and continue going downward. So generally you have everything in your brain already. That's been because you've been following the market, you have been studying the market on the higher time frame, which is the daily time frame, knowing that now I'm showing you how to swing the lower time frame now. You knew that this area was a major area of value in the market, that definitely if the market is supposed to continue trending to the upside, that means we are supposed to continue, are you getting this market to the upside? But instead we broke back into these measures, and we broke the particular support that we're supposed to create to the downside, definitely turning this area to a major resistance. I even give you a shooting star, which is a rejection on the daily. I don't know why you were still buying at this particular area. So the lower time frame are there to trend the market, to trend the higher time frame. What is happening in the higher time frame for you? So for me, I prefer using my 4-hourly structures. That's why you see that my market are always coming out accurate, because the 4-hourly structure trend tends to trend well more than the lower, as you guys get in the lower time frame, because the lower time frame does what tends to fail. And like what I was explaining before, if you are not involved in the distribution process, don't trade, because your areas are there to tell you that, okay, if this market comes to this particular area, definitely something will happen, a reaction will happen. Now, when the market first of all distributed this distribution all the way to this area, it continued to the downside before it found its support. So I connect my dots. Are you getting it? I use a trend lines to connect my dots to see, okay, if I'm even going to trend against the trend, which is the, buy up a bit, I know that definitely this market has touched a particular area after taking all these liquidities out. I guess after taking those liquidity or a structure, whether I like it or not, it was a structure to the upside that I broke. Definitely the market will trend back into resistance. So if I was not selling, if I was not buying before, or I was still in a sell, I could have entered, because I trade CFDs. I get a contract for difference. So definitely I could enter a trade like, okay, we've broken this support, taking this liquidity already. I guess if we've taken this liquidity already that was happening here, getting so definitely the market was do what trend back to another resistance zone. Are you getting? Because this was a break of what a structure. So I would have taken this trade all the way from here when we are unable to continue this trend to the downside. It's there. It's showing you the 4-hourly chart. Trust me, they are showing you what to do. But definitely, you might be the one that has not, that is not finding the market. You have not had the exact knowledge to analyze the market correctly. The market will never ever deceive you on your higher time frame, especially when you know what you're doing, you know what market structure is, you know what is supposed to happen, knowing that definitely, even though this market is failing to the downside, if whenever it breaks a structure, it will come back to a resistance zone, and you have this resistance major, sharp pattern resistance zone at your head already, which even had a minor resistance. So definitely, this was your second word entry. If you have not entered from here, you should always wait for what? An accumulation phase. Now, when the market, after accumulating, after accumulating around this area, it did what? It distributed to break a structure, continue breaking structure to the downside. So after breaking that structure, what did it do again? It came back again, accumulated all the way to, this resistance zone, previous support zone, resistance zone. Now, if you do not enter from here now, even though you are entering from here, know that you are calculating your risk to put above, put your stop loss above this support what area. So if you are not involved in maybe 1.9, 1.19, 1.0920 or 0930 or whatever, you have entered from 01900. I get to know that your stop loss is supposed to be like 100 pips away to the upside, meaning that you are calculating, if you are using 10% of your $1,000, which is $100, you are calculating what 100 pips away. That means you are using just a 0.1 a lot on that particular account. Are you getting a 0.1 lot because you are risking just 100 pips, which is $100 out of your $1,000 account? 0.1 lot definitely would have even continued this market to the downside, knowing that you've missed about 150 pips out of the market already. So you should not be greedy. Definitely, you are going from 1,900 to 1,500, which is 400 pips. So you are waiting for what? A distribution accumulation phase back to the upside, or you can call it a retracement, then continue with distribution breaking with structure to the downside. So if you are not involved in this area, you should know that the next phase is this area, which is your next lower high, which corresponds with your what? Then you put your trend line to it, you connect your dots down and just drag it. So a lot of people don't know how to draw trend lines. I draw trend lines like this. Whenever you are drawing trend lines, just wait for the edges, connect your dot down, just drag it down. Drag it down. You get it? Drag it, make sure it touches at least 3 touches. Once you have these 3 touches, your trend is now perfect. Definitely, you would have even been taking all these trades that is happening right now. Now we're seeing a trade happening right now. Now let me explain something to you from here now. I told you that if you're not involved in this distribution phase, what you're supposed to do, you're supposed to just, even though you want to FOMO inside, the trend is your friend. Definitely, you would have taken this 1885 to 1765,000 by 100 pips. So you can even be swinging all these swings, taking all these swings, getting it, waiting for it to break structure again, take back all these swings. And whenever an accumulation is happening or whenever a retracement is happening, you start seeing them sluggishly. So they will be coming out sluggishly. It will not be very, very sharp, like, the way it's selling big red candles. These are your trends. Are you getting me? These are your trends. So I connected a dot on my, on my downside already. I might be too fast. That's because, I don't know how to, talk unprofessional the way you expect me to, but I'm very sorry about that. You're getting it because I have to start from the foundation, if just like turn into a training session before you can understand whatever is happening in the market. So definitely right now, I want to show you something now. Now, just connect your dots. I connected my dots. This was the first one, second one, the third one. So it gives me what? If I get 3 touches, it tells me that definitely the trend is in order. So I connect my dot, I draw it down. So whenever it touches my, my trend line, that's another indication. That's another confluence I used in buying, right? As I'm talking to you right now, I'm in a buy position right now, back to the upside to come and touch wood. This is a trend line before coming down again. So there are a lot of things you use in the market, but note this, very, very important. There's something called an accumulation and distribution process. When your market is accumulating or retracing back to the upside, whatever you might call it, are you getting it? When your market is accumulating or accumulating, all you have to do is what? Wait. You're not, it's not a must that you must be involved in this buy, because it might not get there sometimes. It might not get to this particular support sometimes. Like, look at this one now. We're expecting that, okay, if this particular market broke structure to the downside, these are all what? Your new supply zones, because it broke structure already. Are you getting it? So a lot of people are waiting for it to come and touch here before they start selling. No, you just have to, enter. Definitely, you are approaching there already. You have the 150 pips stop loss. You might even buy from even this area before you even get to this area, and you have your stop loss 150 pips to it. It will continue with the trend to the downside, because what the trend is what? Your friend. But you don't get carried away because you are trading the 4-hourly time frame or you're swinging the 4-hourly time frame. As it stands right now, we're finding a minor resistance to continue what? Trending to the upside, like it did here and it did here, before entering this major, you get demand zones. And why are we even trying to trend back to the upside? Look at Now, the most important area of value you had right now, like we had at the upside, are you getting it? Right now is this place. This was the previous support we had after breaking what? Okay. After breaking this structure, we had this support that moved back to the resistance zone, but could not find, what's it called? Could not find buys, but it found, supplies resistance or found supplies at this area and moved down. So I tag this as my newest support that I will want to sell from. That was why I give this trade from this area down to the downside. Are you getting it? Because this market has been doing what? Making higher highs, making lower lows, lower highs. Now look at lower low, lower high, lower low, lower high, on that lower low again, because it broke again, then we had a lower high. But to me, this is a liquidity zone. Are you getting so? But it's still a lower high because it broke structure again, lower low. Then we had a lower high again. Then it broke again, lower low. So definitely the market is what's been trending perfectly to the downside, but you have been the one that has not been following the trend because you don't know what is actually what happening in the market. Are you getting? And what's the reason? Like I asked the question, what's the reason why we might be having a minor pullback to the upside? That's because we broke structure again. This is a structure. This was a structure it broke to the downside. So this one down structure again, which is a major structure. Why did I call it a major structure? It's a major structure because this is a very high trend. This was a phase. I guess it. This was a distribution phase. This was another distribution phase to the upside when the market was doing what? Trending to the upside. So you have to have all your distribution phases and don't let this noise happening internally, stress you out or, make you run emotions or because you are seeing red and yeah, a lot of people say that, oh, change your candlesticks from red and what green so that you not run emotions. You are running emotions because you don't understand structure. If you go lower than the 4 hourly chart, are you getting it? Probably to the 1 hourly chart, you now start seeing things happening internally that will be, messing with your head. That's why you see, that's why I'm always inside the 4, at least on the 4 hourly time frame, because I don't like noise. These things happening in the lower time frames are using the fundamental news and events happening. Are you getting it? Generally to what trend? Because something must happen today that will make EURUSD go or gold come down, as in what's it called, dollar come down. There are news coming out today, but it does not prevent structure from forming. Now, statistically, a lot of people just look at the charts. I'm coming, I'll still explain this particular part. Statistically, a lot of people just do what? Look at the charts. They're forgetting that trading itself is statistics. Have you ever gone to a weekly time frame, or let me say the monthly time frame, to calculate or to find out whatever happened in this particular month of what's it called? This particular month of May 2020? How many money? Because at the end, trading is the act of what buying and selling of goods and services, or like a stock. Let me just use like this is a Tesla stock. EURUSD is a Tesla stock or a Tesla company that definitely, if money comes in at the end of the month, they do plus and minus. If it's green like this, that means that money came in more than was it called April. Because the market opened here and closed here in the month of May. Are you getting? Opened at 1.0948 and closed at 1.096. That's another 100 pips. So that means money came in. When the market is green, there was money added in that particular month. When the market is red, there was money taken out of that particular market, that particular month. So what have you been doing with your, how will I call it, your knowledge, your statistic knowledge? Because if you are not an economist or you don't know economists, you will not know how to read statistics and know how to train. But most of us just look at what the what's it called? Most of us just know that we're trained with candlesticks and the chart, and we just look at that. We don't go back to statistics. So generally, I'll be covering topics on what's it called? I'll be covering topics on on this particular training journey. I will cover topics on accumulation and distribution process if I could have time, because I really need to put it together in a way that my community will understand how this market actually works. And I've done something called a multi-time frame analysis. I will be able to, incorporate that to look at whatever I'm going to, come down with my market, how I look at market using probably gold right now, and look at gold, look at gold, look at gold. What are you saying? I'm on the 4 time frame. I'm expecting, my structures to build. That's why I'm not scared whenever I'm trading, because I'm using my candle, as I said, I'm using my candlestick. I'm using my price action patterns to trend my market. This was a head and shoulders pattern that this is a major supply area that right now I have in this market. If I'm selling from these areas. If I'm buying from these areas. Well, definitely the trend is my friend, and the trend is what? Bearish at the moment, because we found this 0.382 retracement like we're having on EURUSD right now. This same thing that has happened on EURUSD is what happened on what? On gold. Look at this. This same thing that happened on EURUSD, because this was 0.382, right? Look at gold. This was 0.382, 0.382. This was the same thing that happened right now. So it gave me that, okay, this for it breaking this particular head and shoulders pattern here and retesting, this is now a major area of value to look out for. This is now a major resistance zone to sell from. So if I was wanting to sell, I sold all the way from here and took, this is a little supplies, a demand zone, which it found demand from. So for you to even find demand here and come back to this area, I will just connect my dots. So I think I will have to break all these things down. So I connected my dot on the very first day. I saw this like I was here, so I was expecting the market to continue doing well, trending to the downside after breaking structure. The market was supposed to come 0.5, they continue breaking structure to the downside, but it did not break structure. Instead, it found what? Supply. It found demand in this demand zone. So if I should go to the 1 hour time frame and show you something like we had at the top, right? Look at the top, we'll have this at the top, this supply zones at the top that it showed us that, okay, I was doing a head and shoulders pattern, but broke down the head and shoulders pattern, turning into a major supply area. I get it. Same thing happened at the bottom here that we used in trending back, switching, reversing back to the upside. So you should use your accumulation process, which is your chart patterns. Call your chart patterns your accumulation process, because when the market got to this area, it got exhausted with a triple bottom and broke structure to the upside, came back to that demand zone and found demand and continued breaking structure again before it got to this particular resistance zone, found resistance. So you would have been involved in this distribution process. Are you getting it? Now, let me explain something now. We are expecting a reversal after breaking what? Structure, right? It needs to do something called an accumulation phase, which are your chart patterns. So if you zone this perfectly well, you would have seen like, okay, I'm looking for an entry because of broken structure to the downside. I'm waiting for an entry or a reversal, something to give me a reversal. And the reversal you got on gold was what? Look at the reversal you got on gold was now with broken structure now. This was the last lower high we had, right? So you are waiting for anything like a candlestick, what's it called? A chart patterns. We were breaking, we couldn't break below again. We started consolidating and came back to equal high again. We came down, we found demand in this demand zone, which we used in breaking to the upside. So if you had been involved in this up and your stop loss was under here, you would have known that, okay, right now the market has done found reversal back to the upside. And where is the market coming to? Why were you scared of taking this trade from 1,900 or 1,910 or 1,904? Why were you scared of taking this market back all the way to the major resistance zones, which is this long? So the market itself gives you, speaks in languages, and the languages they've taught each and every one of us that are traders. It's that, first of all, learn what trading is all about, define trading. Secondly, what you should learn about is the economics of trading and the psychology behind trading. Are you getting it? Then thirdly, what is risk and money management already? Are you getting it? Then fourthly, what you should learn first of all is mastering the art of using your candlesticks, which are your sign languages. I call them, the candlesticks are my sign languages that is telling me that it made a sign for me and telling me that, okay, this is a bearish engulfing happening here. Are you getting that this is a bearish engulfing happening here at the resistance? Are you getting, or a shooting star happening? It will definitely show you or how the structures are building. Are you getting it on the lower time frame? That's why you have the lower time frame to see how it is trending. Because if this market actually broke structure to here, why we are used to selling in this area, you're not supposed to sell again. You're supposed to wait for your candlestick as in your short patterns to happen, which your accumulation phase. Now you accumulated and got exhausted in this area, broke above again. We tested that particular area and did what? We tested that particular area and did what? Continued to the new lowest, as in, what's it called? The next resistance zone, which is about 500 pips to the upside. Are you getting? So you should know that this is now your new what? Distribution phase. Because the market actually what did what accumulated here after breaking the structure and came back to distribution to your supply, what's it called? Your resistance or your supply zones, and found supplies and switched again to the downside for you, because generally this was a break of structure to the upside. This was a structure that broke that, what's it called? This was the last structure. We broke it to the downside again. I guess retraced and the market continued, was switched to the downside again. Here with what? A head and shoulders pattern again. So the market itself, first of all, the market itself uses sign languages and uses all these sharp patterns to move. It cannot just boom, 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 even though it's a fundamental day, it will not do it. It will go through an accumulation phase or probably show you a candlestick pattern. So first, like I've given you a trading psychology, the foundation of trading itself. I've given you like things you must master. That's the mastering process right now. Is an act of waiting and waiting for particular sharp patterns to form or your price action patterns to form before you do what you enter, because definitely you are what then you should be doing what following the trend, knowing that these areas are now vital places you should be selling from. Not all these areas, these are noise. This annoys, even though I'm on the 1 hourly chart, this annoys, as long as I've entered this market from a sell from here, I guess I've entered the sell from these old areas, which I know that these are resistance zones. I guess the moment we have passed that distribution phase and we're breaking into the downside, are you getting it? Sorry, the accumulation phase and we're breaking into the downside. My stop loss is on top of here, 1955. I gave the signal. My stop loss was above 1955, and I know that we'll find resistance at this particular areas. Are you getting it? I think I entered 1938 to 1955. Calculate that. I guess that's about 170 pips up to the what is it called, stop loss. So if it fails, I know that I've lost what's it called, out of my $1,000. Maybe I'm just using $1,000. I have $1,000. I've lost $170. I still have money to trade, because I know that the market definitely, because for it to invalidate and go and take my stop loss, that means the market wants to do what? Manipulate to the upside or continue going to the upside. Well, definitely, this was my 0.618 and 0.5 Q zone, if you measure it very well. Again, so generally, the market itself will not just deceive you, but will structure to the downside. So I was expecting to sell from 0.5, 0.618 Q zone. Are you getting it? I call this my Q zone or my entry zones. So if I've entered I entered one 1948, I entered one 1942, I entered on that one 1938 again. I think those were my entries, and my stop losses were above 1955, because I know that definitely we are supposed to do what continue breaking to the downside. But unfortunately, we did not continue with the trend to break to the downside. So that was what brought the concern to me that, okay, if we're not breaking to the downside, and this market is finding a minor reversal back to the upside like it did here, I get it. That means we are coming back to the supply. So I think I entered another market from here. Immediately we broke this particular structure. So the market are there. Look at immediately I know that the market has been trending to the downside, but these are internal noise. These are internal noise. That's why you don't see me trading my lower time frame, because the last structure we had, and I think I took a partial loss because I entered more entries from these areas. I think I entered more entries from these areas, but I just placed it down because this market was coming down, came up, find resistance again. Are you getting it? Started trending, then broke structure to the downside again. We're supposed to continue what breaking structure and continue this market, knowing that definitely if we have continued from here, definitely this is under 50. Are you getting the 90-20? I think 1950, 1916, sorry, 1916 to 1880 is about another 300 and many other pips to the downside. 1916, 16 plus 20, that's about 360 pips to the downside. But unfortunately, I took a loss, and it's normal because I've been making money all the way from January all till now. So definitely losses might come. And you're expecting that the market should continue doing or going to the downside. But it broke. So for it to recollect this particular structure again, definitely we're coming back to resistance again on the falling or higher time frame. I get it. So that was why I told my boys not to sell from here, that these are liquidities that the market wants to take what? Wants to take liquidity at the top side. I get it. What is it? I told them that this market was liquidity because they wanted to sell from here, but this is not a sell zone. You should have at the back of your mind that definitely these are liquidity areas because the major resistance we have is at the top. So a lot of people say, okay, what of this minor liquidity we have here? Are you getting? So let me put my stop loss above it. No, always remember that the market has your major, what's it called? Your major what? Your major resistance zone. These other ones you have been seeing since are minor. Your major resistance zones, these ones you see. That's why I said that I'll only take my trades from my far structure. So here we are right now. What next? What next? That's a question that everybody's asking now. Here we are right now. What next? What next is that I've been able to connect my 4-hourly dots because we are not able to come down. So for us to even pause here and do a reversal back to the upside, back to our resistance zone, that means the market wants to do what? Buyers and sellers want to do what? Wants to fight. So I connected this dot, I connected this dot, I connected this one, I connected this one, I connected this one, and it gave me something. It must definitely give you something. An ascending with triangle. So definitely, even though I want to buy right now, I might enter from 1910 to 1950, 400 pips, and put a 200 pips risk to reward to it. Probably put a tighter one. So definitely, if I'm even taking this trade right now, I take 1910, what's it called, 100 pips, like 1910 to 91900. Definitely 1918. So 200 pips to 1890. Because that might come and turn to equal high, 890, turn to equal high, then do a manipulation back to the upside before breaking down. So you just have to have all the concepts in your head. Are you getting? So I might put my stop loss underneath here, pull my buy from here, take a 40 pips to the upside, 400 pips to the upside. Depends. But is it worth it? No, because let your accumulation process to complete. Once it's completed, you have a larger trade coming for you. And what's that larger trade? Right now, since the month of August, we're accumulating. So it's either we'll go to the upside or we'll continue to the downside. So 1910 to 1850, that's about how many pips? 600 pips either to the downside or 600 pips to the upside. So this is now your what? Your accumulation fees, that if it breaks and continue to the upside, are you getting it? You know that your distribution fees will now be 600 pips to the upside. That's what I mean by that. Are you getting it? So since it's a multi-asset analysis I do, are you getting it? I know that EURUSD is a direct correlation of the dollar. So since EURUSD has taken what? Liquidity right now here, are you getting it? It has broken structure. Definitely EURUSD might want to, switch back like all those switches I was giving you here, right? All the switches I've been giving you. If it happens here, I know that even though it's a 15-minute switch, I know that it might not be strong, but definitely I have my, higher time frame structures telling me what it wants to do already. It can continue to the downside, but it must switch first before I enter. No switch, no entry. No switch, no entry. It might be a 30-minute switch, it might be a 15-minute switch. No switch, no entry. I will not enter if I don't get my switch. I getting it on my lower time frame. So I need my change of character. I call it a change of character, not switch. I need my change of character to happen before I can do what? Take a blind buy to the upside, because whether I like it or not, a swing is a swing. So I know I have this particular zones here. So my zones are there. So I will be buying Only I might set a buy stop order from 1920. Are you getting it? Buy stop, my stop loss be below 1910 with 100 pips and take a 100 pips. Are you getting it? To the upside or depends to the upside. Depends. So 1920 to 1930 or 1935. So I might take that trade because if we are truly going to be inside these descending triangle, ascending triangle on the Farley chart, and we break above this major area again, are you getting definitely I want to buy from 1920. Are you getting it? Take on that 150 pips out of the market to 1935. Are you getting that's 150 pips? I know I risk 100 pips to make 150 pips. That's just how you should know what to look at the market. So if you're not building structures, if you are not understanding how your price actions, you don't understand price actions, you don't understand the manipulation distribution process, you don't understand sorry, I said you don't have to understand the accumulation time, that whenever the market is accumulating, you should wait, and when it's distributing, you should be involved. If you're not involved with that distribution, you are going to wait for an accumulation process again before you get on that distribution, which might take you days, weeks, or months, especially when you are trading the foliage time frame. Now, look at how long it took us from August to September, even 1 month to accumulate. It might use another 1, 2, 3 weeks to distribute. But the distribution process is very, very long. That's where you see that your market moves in a very, very high manner. So once you're not involved, it will get to a target of that distribution, I guess, of that accumulation, and start, accumulating again to distribute to move in the next cycle. Again, so the only reason I'll buy right now is I need something to happen in these areas that is going to form something like a sharp pattern. I guess it's something like a sharp pattern in this area. If I'm buying gold, I guess I'm not going to buy from here because the market is still in a downtrend. So the market might just continue buying to a downtrend. So I will not use my, what's it called? I will not use my lower time frames because lower time frame times what to fail. Look at now. Look at it fail. Look at it failing. But definitely will have a support. So you might just okay. My mentor is telling me that this is a fairly structure and probably an ascending triangle is happening. Let me buy at the support of that ascending triangle. No, that's not how it works, bro. That's not how it works. Trust me, that's not how it works, bro. All I know is that definitely this market is taking everybody out right now to this particular place, and we'd have to do a manipulation process again, taking everybody to this place and continue a manipulation process to the upside. But anything can happen. Anything can happen. That's why they say wait, don't FOMO. But right now, maybe I'm not even looking at the fundamentals, but the fundamental news might be happening and is in the direction of the trend. I guess in the direction of the trend. Look at it might be in the direction of the trend. So what are you doing? Where are your major areas of value? Are you supposed to be even buying from here? You're not supposed to buy because this is a downtrend. Even though it's giving us like, okay, we are getting this support. I don't take all these trend line supports and resistance. All I want to trade is my major horizontal support and resistance. So don't get me wrong. You should be able to decode and put all these things I've been explaining together, even though I've not been putting it very, very well to you. I'll come again. First of all, before you can become a trader, you have to understand what trading is all about. You have to understand that trading is the act of buying and selling, or adding money or removing money from a particular asset. So, how much was added this month? You have that statistics in your hand. How much was added that last month? How much was added 3 months ago in that particular quarter? You can use that as a distribution of what's going to happen in September, October, November, December. Again, you can use it to know what is going to happen because Q3 is about finishing right now. We're about entering Q4. Are you getting so inside that Q3 that is about finishing right now? You don't expect the markets to to just balance. Now we've done Q1, January to March. We've done Q2. What's it called? April to what? April to Q2 is April to June. Are you getting it? Then Q3 is from July to September. So Q2 is about finishing in how many days? 4 days from now. Up to me, I'm not supposed to trade because that's another cycle that's about finishing. I want to see what Q4 have for me, which is from October to December. So confidently, I would trade all the way from July knowing that all the way from what? July, where's July? All the way from July that, okay, if we could enter into this market in Q3 in a sell and breaking the resistance, trust me, Q3 is what you have here right now. So how large are you into this business before you took it as a profession? How large are you? Because you just want to trade, and when you're losing money, do you know how the sacrifice professional traders have put? Do you know what they've gone through? They've gone through mastery of their short patterns. They've gone through the mastery knowing that I'm not supposed to buy or sell from this zone. Because the only way this market will definitely do what? Move right now in your favor is this right now. Okay, now this market is what? Bullish, right? This market is bearish, right? And it's going to the downside, right? But do you know that this whole place is a distribution process, a distribution zone that this might turn to what? But right now, this is a mistake a lot of people do again. I'm explaining your gold and EURUSD at the same time. I'm sorry, but I have to do it. Now we know that if this market breaks above this resistance, definitely we're going back to $1,000, right? But do you know that this is a major resistance zone that this market will definitely, when this market is coming on this particular day and probably is breaking to the upside, oh, because we've broken above here, we closed the 4-hourly candle above here, and you say, okay, we are broken out of what's it called? You've changed character to the upside. I was talking about changing your character this particular day that until I say you change your character, I am not buying, right? Did we buy? No. Instead, we sold because that's the major resistance and that's the trend itself. The trend is my friend. Go and watch those videos. I was particularly saying that I am not buying and I'm not looking at the lower time frame to deceive me because they tend to fail. Because if you're on the lower time frame, you would have been seeing this minor breakout happening here that are definitely going up and you'd have been involved and taken out right now. That's why I said always use what your major resistance zone. So this can come back and turn liquidity tomorrow. So you have to have all your market structures, or how the structures have been building. You need at least 1 year to 2 years to be able to be involved in the market, losing heavily. But trust me, the holy grail in trading is that no matter how much you've lost, those were just your sacrifice days. You need to study whatever is happening in the market because I don't joke with what liquidity. I don't do what? I don't joke with what? Liquidity. Because these are liquidity concepts that I might use tomorrow. Come back into these supply zones. Are you getting it? And, a lot of people ask, okay, it has broken above. Then it's coming down. Let me take a trade from here to go into the upside. This might just be a manipulation process of taking liquidity to the upside and continue trying to the downside, knowing that this other downward, it was a support, minor support, has been coming since is also what liquidity. So don't get me wrong. I might be talking above, your understanding state right now, but this is just how the market trends, and you need to understand this entire market first before you do what you enter into that market. So these are just how the market trends. Liquidity everywhere, because they know that all you've learned already is just support and resistance, or your minor, you want to trade your 1 hour time frame. You are expecting the market to move directly in your favor without looking beyond it, what's it called, the candlestick itself, or your support and resistance itself, without looking at, your market cycles, without knowing what's it called, accumulation phase means that you're not supposed to be doing anything, without knowing what your distribution phase means, without for you to be involved in that particular market, that even when your distribution has started, that's when you might even FOMO, fear of missing out, because you have enough capital. Probably your entry is supposed to be 100 pips. Now it has moved probably on that 100 pips aside. You still want to use that same 100 pips as stop loss. So you know you're supposed to increase that 100 pips stop loss. 100 pips, but the market has moved already. But when it moves and is moving very well in your direction, definitely you have to involve yourself, because you were not there when the market actually created a sign for you, and the sign created for you is definitely a bearish reversal sharp pattern, or a bearish candlestick pattern for you. And I've shown you a lot of reversal chart patterns right now, or price action patterns, which are the head and shoulders, the what's it called, the descent triangle, the ascent. It might use anything, but I wait for my price action pattern. That's why I'm a price action trader. I can continue talking from now to tomorrow, but definitely what this is just what and how I look at my markets. Are you getting it? Because the market might definitely not, after taking this liquidity, a lot of people are expecting that I want to buy from this area, right? But you know, a lot of people don't want to take profit now. Probably have been selling from here. They don't want to take profit here. They don't know that this market definitely does not go directly to, your area of. These are the things they use your head on. Now, a lot of people are waiting for this, major support to start buying, right? But and a lot of people have been on this trade from here or from here, selling to the downside. They think that their take profit is here, but the moment they are seeing it coming up, oh, they will not take profit. But they don't know that this market still has tendency of not even coming here directly. Are you getting? The market does not have has tendency of not coming here directly right now, but wants to retrace a bit to take you out before coming there to continue going up. So trust me, for you to be a trader is not an easy task. For you to be a trader, you have to pass through all these topics I've been mentioning on my Telegram channel. Are you getting it? What's it called? The foundation, what is trading, the art of buying and selling, the particular asset that you think you can be able to, that is trading perfectly well, and it has a lot of liquidity. What is liquidity? Money. A lot of money in the market, buying and going down or coming up. I guess in the funds, a perfect structure for you. Then what's it called? After the what's it called? Understanding the market, you first of all need to know what is statistics. Understanding statistics. Stop looking at these candles. These are just candles. The real figures, the real money. Where have you gone to look for it? The real money that happened, the real money that came into the market, or the real money that was taken from good last month, it was taken from good last 2 months. Where was it since July now? This market has been in this cycle coming down. Are you getting it? From this particular daily support, what's it called? Return resistance. Where were you? What have you, as in, how will you study that? How do you know that definitely, if probably we're at $1 trillion or $170 trillion, definitely we are supposed to come down. Those values, have them also. Those are the things the fundamental news uses. That's why you don't see me going to fundamentals. I don't care about fundamentals. Yes, it happens, but I don't care about fundamentals. Why? Because definitely anything that is going to happen today, it's a representation of has happened in the chart already, or how the chart has been moving already. I don't use fundamentals much because I know that definitely this is a new session. We're having civic consumer, we're having new home sales, and all those things are the things that the noise that I was talking about that happens. These are the what noise I keep telling you about. Everything. Because definitely, even though it's a fundamental day, it will definitely sell because it has gotten to an area of value and reversed. I've explained all this before. Go and watch over and over again if you want to understand. Everything. It. Structures are, your fundamentals are a representation of what is happening in your structures. Because this Q3 about finishing right now, we're buying entering Q4. So definitely, you should know that today, are you getting it? Put a lot of confluences together. We've taken these liquidities out already. So definitely within the next 5 days or this week, the market will definitely what has been selling to the downside. We want to initiate a, take profit and pull back. So there are a lot of ways, but I've gone far in terms of, being an investigative journalist in trading. I've gone far. So I might not speak the way you will understand, because the only thing you understand is that, okay, we've taken liquidity, even though you understand this liquidity concept I've been drawing since, we're taking liquidity now, we're broken structure. So definitely we're supposed to come back to a supply zone, knowing that this is liquidity. And yes, we're going back to the supply zone. We're going to break above this trend line and retest it and continue going. But instead, we'll break below it and continue coming to the downside again before we continue going to the downside. These are just things that the market itself, the market makers use in taking your money, because they know that all you know is just support and resistance. So if this is a break of structure, this is my new resistance zone, it will come back, just touch this trend line, continue going. They might come and even come to this major resistance again. Are you getting before continue going? Because you've put your stop loss, you've taken your trade here, your stop loss is just above this trend line or a little bit above here, or 100 pips, you're taking maybe 50 pips, and you're supposed to use 100 pips. You don't even know how to calculate your stop loss without even using ATR. So generally, as I tell people that, okay, if you know you are trading, no matter where you entered from, use at least 100 to 200 pips stop loss. At least me, I use 200 pips. I don't know about you. I don't know how much capital you have. I don't know how greedy you are that you really want to use just 100 pips, thinking that, okay, definitely I've entered from here. It should not go more than 100 pips. But even though you are blind in this market, you're not saying it the way I'm saying it. What do? Use 200 pips to it. The market moves in circles. So if you are trading with the trend, you'd have entered from 700 area, are you getting it? Knock 200 pips to 900 to it. Are you getting it? Knock 200 pips to 900 to it, knowing that, okay, no matter what, I'm risking $200 to make at least, $200 one to one, no problem. Not count to run. Are you getting it? Or probably you know that this is a major resistance zone, and because you are using one lot before, are you getting it? And you know you have a $100,000 account and you're using just one lot, are you getting it? And which is definitely maybe 100 pips, $1,000. Not 10 lot to run. It will continue. You're wasting pips. Trust me, you're wasting pips. Yes, I know risk and money management is vital, but if I'm not taking this trade, if I'm using one lot before, are you getting it? And I'm not taking this trade from here, and I'm taking it from this major resistance zone. Trust me, with my $100,000 account, I will knock 10 lots to it and risk even 100 pips, which is $10,000, to it, knowing that my next, how many pips from 1900 area, right? From 1950 area, I guess in 1940 area to 160 is about 340 pips to the downside, 340 pips, 10 lots. Calculate them. I know say I get something. That's because I have all my confluences intact. Intact. Are you getting it? So there are most times I disobey my risk and money management. And the only time I don't mess with my risk and money management is when I'm entering a trading against a trend or entering a retracement. My risk and money management is always intact. If I'm going to buy, I'm already in a buy. Are you getting it? I'm already in a buy. But my risk and money management is always intact. But when I'm following the trend and I'm seeing my confluences happening, knowing that this was a previous area and we're definitely breaking down, we have a long way to go. If you look at it from the higher time frame perspective, we have a long way to go. So even though that I can take this trade all the way down to this area and take my profit. So I've been talking and talking and talking since, but at least try to watch these videos over and over again, knowing that we'll have this resistance, now turn resistance again, and we'll have this support, now turn support again, that we might come up back up a bit whenever we even have that. That's why I'm even taking 500 pips from it. I get into 1900 and find supply again to probably come down here. So you should be able to be conversant with the movement and stop using lower time frames to stress your brain. I don't know if I'm making sense. Stop using the lower time frame to those noise happening in lower time frames to stress your brain. Wait for your higher time frame structures to form properly, and you're seeing the structure well, then you're taking it, then you are confident that you can go for the next 1 or 2 weeks out of that market, and you are definitely going to make money from it. Because right now, it's just as simple as that. Are you getting it? But what is the foundation you've been using? Are you getting it? What's your foundation? Where do you start from? Do you start from the basics? Are you getting it? Do you have all your candlesticks in your head and you know how to identify them at a particular zone? What are the zones you have to look out for before identifying them, knowing that these are zones you have to look out to take your trade from? And this is just a fake out. Support, fake out, support. What are they? Have you been able to find out why we're having a buy to the upside from that particular area using Fibonacci retracement tools, your price action, 0.5, 0.618 kill zone, and we might continue going on because we are actually consolidating on the monthly? Trust me, the markets are there. You are the one that is failing to analyze it correctly, because a lot of people are not even saying this, that the monthly is actually what sluggish and still bullish. Was this what? This is just noise happening on the monthly. So for you to know that noise, you should know that anything can what happen on your lower time frame. That the trend might not trend well because actually is on the monthly is what consolidating. Are you getting? So for what is happening on EURUSD right now and what is happening here right now, all these my confluences, I can actually buy, put my risk to it. If it goes down, take my 100 pips or my 150 pips, I'm still in profit because I still have more trades to go. But I will not buy more. I'll take lower lots. I getting right now. If I'm using like 5 lots this week. I getting since August. I've been using 5 lots. So I will know that okay, this kind of trade now. I'll put 1 lot first. I getting so that 1920. If you break above, we test 1915 and find turn into a support. I getting. I know that I will take on that trade because that place has turned resistance now turn support. I getting take 1950, 1915 to 1930. That's take just that out of the market. That's distribution phase out of the market. And you know what? Just rest. See you. To bet definitely maybe leave the rest ones to run. I've taken 1 lot right now. Take 2 lot, take on that lot again. Take maybe 100 pips swings from it and just rest. That's if we break above and continue back to the upside again because of this ascending triangle. If not, the trend is what, my friend. So how have you been looking at your market? How have you been looking at your market is very important. Knowing that I might even take all these guys on, knowing that this same liquidity that happened at the up might be this one happening at the downside right now. I get it. So your market manipulation processes, your accumulation and distribution phases, the chart patterns, your price, your candlestick patterns, your price action patterns, your statistics. I've mentioned every other thing. Probably I'll be doing video, maybe 1 hour video, 30 minutes video, breaking each of these phases down. It will take you nothing less than 2 to 5 years to get all these things mastered. This is why it's even better than university education because at the end of the day, you gain a knowledge that you use in making money for the rest of your life. For the rest of your life, you gain a knowledge that you use in making money for the rest of your life. And always wait for your candles to close before taking trades. Now we still have about 2 hours on this candle to go, but right now you're entering markets. What is trading itself? Is a representation of what is happening in the next 4 hours if you're in a 4-hourly structure. In a 4-hourly buying and selling that has been happening, because if you go to the lower time frame, probably 15 minutes, you will see buy happening in this particular 15 minutes. This was a buy to the upside, found resistance. I get the resistance. This market was going to the downside. You're taking this trade from 1915, you take profit from 1905 or probably 19. Let me just say 1915 to 910, 550 pips. You're out of the market. 1 lot, $500, you're out of the market. I guess it's 1 lot, $500, you're out of the market. Or 10 lot, $5,000, you're out of the market. These are what most scalpers do. They put higher money because they know that the market is going to move in that direction to them. Are you getting? So definitely for this market to even switch to the upside, we need to continue breaking structure to the upside. Break this particular structure lower low, retest, find it, and continue going. I just think these lower time frames are just too much noise for me to comprehend. I don't want to stop my brain. I don't want to even look at my candles. Most of the time, I just even switch to the line chart. I just switch to the line chart most of the time to not see what's it called, the look at very clear. I seen it. Sometimes you switch to the line chart, fly away from those candlesticks that have been used to train you, and just look for those sharp edges. Look for those sharp edges and take them as your support and resistance. Look at it, how clean, double bottom, how clean, sharp edge. When the sharp edge is there and is not breaking below, you can even take a trade, put your stop loss below it, takes your what's it called, your take profit in between from here to here is your trade. That's about 1910 to 1915 to 19 what's it called, 30, 35. That's about 200 pips. Those are things you should take. You must not get to the ending before you take profit. That's why you see that you have been used in this sort of markets. So this is what I have for you today, 26th day of September 2023. I might have spoken interchangeably Trust me, I'm just here to document. I'm not here to train, because I really wanted to, start an academy and open an academy to, pour out the knowledge I've gotten for the past 8 years in this business. But definitely it's not working. So I don't really have much time. Training is supposed to be luxury, but definitely by the grace of God, we all, the business itself is just to, even though we are the whole 200 million Nigerians are in this market, IES taking money, taking even 100,000, 100 million from it every day. It does not take a scratch from the entire market, because this is a $5 trillion liquid market that's happening every day. $5 trillion are either taken from the market or put into the market every day. Liquidity we have in the market is $5 trillion every day. How many of we calculate that $5 trillion, that even though I'm taking 100 million from it, you're taking 100 million from it, this one is taking 10 million, 20 million, 30 million. We are still not enough. So to me, trading is free money, because how can I go to university and learn a course for 5 months, for maybe 5 years, and at the end of the day, I'm making money even more than politicians in my country? Are you getting it? Because right now we're talking about 500 pips coming to the downside from here. If I have 10 lots here, that's $50,000. I didn't do anything. I just know I entered the trade from 1.1001050. I getting it? I'm taking it to 1.10. As you getting it, 1.0550. That's 500 pips. I've taken that 10 lots. Is it $50,000 here? $50,000. $50,000 right now. Dollar today is $1,050 or $1,020. Even though it's $1,000, that's $50,000 times 1,000. That's 50 million naira. No business. Trust me, no business. I would have taken this trade to put this money on last month. Are you getting that? Would have given me $50,000 this month. No business. If no business, I'll put this 10 lots, which is about like $10,000 to enter, or even $5,000 if you calculate it very well, to enter, risking maybe just 100 pips to it, 10 lots, risking $5,000 to you, risking 5 million naira in that business to make 15 million naira within the next, what's it called? Within the next 1 month. No business in Nigeria. So don't be greedy, don't be a thief. Wait, let it run. Leave your runners to run. This is all I have for you today. My name still remains the CEO of Visionex Limited. Bye for now. Bye bye.